the fading products, I think closed-end funds are done, So sorry to a couple of you who are players in that. I think mortgage-related products are dead. I think securitized products are dead. I think the hedge fund to funds business, and I think Roger, maybe one other, or maybe Scott Powers as well, are going to talk about hedge fund to funds. But I think the hedge fund to funds business is a racket, just to be clear. I think the hedge fund business, I disagree with everyone. I think the hedge fund business is going to come roaring back. I don't think hedge funds have gone away, but I think hedge funds of funds might have seen their last day here. They're certainly going to see a lot lower pricing. Paying a guy 1 in 10 on top of someone else 2 in 20 I think that business is gone. I think VC and private equity are threatened, although from my couple private equity firms in the room right now, aside from the fact they have an enormous investment opportunity in your businesses, right? Financial services private equity opportunities are enormously good right now. On the far right, the emerging products, kind of what's going to win. I'm certainly not going to read them all to you. I think 40X structures, the third one down, are here to stay. I think that the liquidity premium is a big deal. I think a lot of 40X structured products. Hence, that may be where the hedge fund industry goes and other industries go, is into more structured or more liquid products like that. I think tax-aware products are a big deal here. Certainly Obama's going to raise the tax rate at some point. And certainly as we come back out of out of this poor market, we're going to see big gains, and what those rates are going to be a big deal. I think target date funds are here to stay. Again, I disagree with a lot of people on this. I think target date funds are a good product, possibly structured wrong, possibly structured right. Target date funds are a good product for the vast number of Americans out there. I think the fundamental trends of like fee accounts and open architecture are here to stay. Maybe slowed down temporarily, but here to stay. I think indexing is going to grow dramatically. Passive investing is going to grow dramatically. I think ETFs are the most important product invention that exists. Absolute return products are here. Non-correlated products are here. You may ditz hedge funds, but I'll tell you, actually, I think this is a Roger chart as well, but you look at the data of long-only managers, and you look at the data of hedge fund managers, be careful if you're not in the hedge fund business, because you start looking at things like 10-year returns, long-only managers are negative. Hedge funds aren't negative. Be careful, right? They're taking a lot of heat in the press, but I'm not sure it's what everyone says it is. That's me challenging conventional wisdom, as Skip told me to do. So some of those things I think are important to pay attention to.